And welcome. This is Mary Ellen McGonagle here with Erin Swenlin with our all new Chartwise Women show. And Erin, welcome. I know just prior to jumping in here, we were talking about our incredible weekends where we were tasting wine and just celebrating the beautiful weather out here in California. My daughter was visiting from Cleveland, Ohio, where she now resides with her boyfriend, and we made the most of it. Hikes in Malibu and wine tastings and lots of other fun things.
Similar. I was down in Temecula with my daughter and her boyfriend and his parents, and we spent all of Saturday wine tasting. Like we started at 9:30 in the morning. We were doing our champagne toasts at 9:30 in the morning and hit our first winery at 11, and we did not finish until 9 p.m. So,
oh my.
Yes, it was a great time. We got to know each other really well.
I'm sure.
But I have to say, it was really tiring. I was kind of zonked on Sunday, to say the least.
Well, I guess that's what weekends are for, right?
Yes, but I getting all ready for the holidays.
That's it. I wanted to check with you. I know there's a lot of talk about getting shopping done and getting ready for the holidays. How are you faring? We're not quite at Thanksgiving yet, but
yes, I mean, I did manage to get my daughters their gifts, so at least they're taken care of, but that's pretty much it. I know we're going to talk a little bit about retail, and unlike the majority of people, at least so I'm hearing, Mary Ellen, I have not gotten my shopping done early. I'm probably going to be one of the ones who has a picture from Amazon of what they're getting, and I'm going to wrap that up in a package. So,
oh my goodness,
hopefully that won't be the case. But
you should put it in a big box and then have smaller and smaller boxes.
But I do need to get that. I need to get on it. I really do.
Yes, and I have not started either, so we're both in the same boat. Well, no, you actually did get started, but
got a little.
But I think this leads us into what we are going to be reviewing today. And so first up, I am going to share with you what is happening as it relates to the broader markets, news that is taking place. And today, in fact, retail sales numbers came out for last month, and they were very strong, up 1.17% year over year. So the markets are excited. We did see a number of retail stocks really outpace the markets. It was consumer discretionary was the biggest group this week. However, I will say, and I think Erin and I will share this with you, a number of these retailers have already started moving. There's a lot of talk as far as individuals having completed their shopping already. Target actually moved their Black Friday date up to accommodate this concept as far as individuals starting their shopping early to get ahead of this supply chain issue. It's a really big thing that's being talked about quite a bit. The US Postal Service already came out 2 weeks ago and said, hey, we can't guarantee your packages getting there in time. So issues abound, but the consumers are continuing to open their purses. Another component is the fact that the savings rate during the pandemic surged, so that we do have an improving economic situation. Unemployment numbers are going down, and people have a lot of people have some discretionary income that they are willing to put to work. So it's a very vibrant area. Today, our anchor is to share with you the concept that when you are looking for growth stocks, for stocks that can outpace the broader markets, do not forget about retail stocks. Consumer spending is 2/3 of the US GDP, and all of that stems from consumer spending and retail. So we're going to get a lot more into that as we move on here. So next up, we are going to go ahead and share charts that we have.
So I did there are a couple of things I wanted to talk about as far as this idea of retail being an anchor, an area of the market that's very important. And certainly part of that right now is seasonality. And I decided to talk a little bit about the seasonality tool. So we'll be talking about that, but this is a seasonality chart, and I will show you how to get to these, but this is for consumer discretionary, XLY. And basically it tells you that over the last 20 years, when XLY tends to outperform. And it does seem to be right around in this last quarter of the year that you tend to get the best outperformance from XLY, the consumer discretionary. Now, of course, there are a lot of different things in discretionary, but one of the big, one of the major members would be the retailers, clothing and such, accessories, etc. So I just wanted to point out the seasonality and that you can do this for sectors and industry groups. And it's quite easy to get to. If you are at your dashboard, you can go into the seasonality tool right here. And when you go in there, then you can put in pretty much your stock. You can put whatever it is that you want in there. So we did XLY, for example. So I'll just show you how you do that. But one of the things really, really important, you notice this looks a lot different from what I was showing earlier. That is because we want to get as many data points as possible. So you want to drag this. This tells us over the last 20 years instead of the last 5 years, which is what it defaults to. So you really want to pull that out, get as many data points as possible so you really get the best idea of what has been going on. But I do have a few stocks that I'd like to share with you. And first one up is Dollar General. Now, this is a specialty retailer in consumer discretionary. And really, it had a really nice pop this week. And it was already setting up nicely. We had this reverse head and shoulders, a really nice basing pattern. And now we are getting that breakout that is confirming that pattern. And so I really like the setup on this stock. You have the RSI, which is very positive. You have the PMO, my momentum oscillator. It tells you whether there's movement, momentum going on with that stock. And whenever I see a bottom of my PMO above its signal line, that red line, I always get excited. We also can see that stochastics are rising nicely on this one, and it has been outperforming the market by quite a bit. So it's a great place to sit, and I like it going into this holiday season. Despite it being, like I said, it's a specialty retailer. It's not like you might probably will find things that you need there for your holidays. Land's End is another one that I was going to share. And this one's actually kind of a beat down stock, but it's really starting to come into its own, a really nice rounded basing pattern here. You can see the breakout above that 50-day EMA, and then now above that 200-day EMA. Again, stochastics looking great, and you can see it is starting to outperform the market as well. Those are all of those things that I like to put together on a chart. But let's go ahead and look at seasonality, because you can get to that right here. And there it is. And again, this is the last 5 years. In the last 5 years, certainly November and December have been very good for Land's End. But let's go ahead and just pull it out just a little bit more. We can get as much as 8 years here, and still you can see with Land's End, seasonality is ripe for this time of year for Land's End to do well. So we already know going in, we have a really nice looking chart, but we also know that it has great seasonality. And then I do have one final chart that I will share. PVH, actually I had two, but we'll see if we get time for that. Clothing and accessories company, PVH. Really nice flag formation is set up here. And again, you have that momentum indicator, the PMO moving higher. Stochastics have turned up higher, and they're in the upper range, which tells you that there is internal strength going on. And of course, that RSI positive. And then you can see that really since November, it has been trending up against the market as far as its performance. So I like PVH. Let's go ahead and just take a quick peek at seasonality, and then I'll give you your shot here. So again, last 5 years, really strong seasonality. So 80% of the time, It is up 11.6% in the last 5 years. Now, if we drag this out to 20, you can still see November is really good. December, maybe not as good as it was showing in the last 5 years, but certainly November is still looking good. So I like the seasonality on this one as well. So again, you can get to seasonality, you put your chart right up there, scroll down, and then there's that little seasonality button, and you can get right there and see seasonally how your stock or industry group or even ETF does or is doing.
Very good. Very good. So interesting. Yes. So I am going to pick up where you left off and take a look at some of these areas that are on the move and have been on the move. So first up, I'm sharing this first page interface here on stockcharts.com. I mentioned that we did see retail sales numbers were reported today, but also we are in the very beginning stages of retail companies reporting their earnings for the third quarter. And that, of course, is the primary driver, particularly strong earnings of stocks that move to the upside. So from here, I'm just going to take a quick tour of the S&P 500 market movers for today. And this really, for me, is how I very quickly can assess if there is a sector rotation taking place, if I see a number of stocks in a given area starting to pick up. So I'm going to pull up what's called this candle glance view. It's a 2-month daily price chart. And again, being familiar with these ticker symbols allows me to quickly note that Home Depot, Etsy, Lowe's, and Tesla. So 40% of the stocks on the move today are retail related. Home Depot came out with earnings today, super good numbers. The stock broke out of this flat base to a new high with strong earnings. Etsy has been on the move. For those of you not familiar, it's an online platform for goods that are primarily homemade, but very, very unique. And this stock has been in a nice uptrend. So that was one area I certainly did want to go ahead and share with you. From here, I'm going to move over and take a look at the sector summary for the day. And of course, it does confirm what we're seeing, the top 10% movers on the S&P 500. Discretionary stocks up 1.6% relative to the S&P, up less than 0.5%. So I did talk to you last one of our earlier shows about this concept of picking up on sector rotation by using that sector chart. This is consumer discretionary XLY in the S&P, and it did move in advance of today. So that's what I'm going to be sharing with you today, are some of those stocks, and explain why they started inching out within the consumer discretionary area prior to the broader markets. So let's go ahead and want to see if I had that grouping already up there. So if you'll, and actually here's PVH that you pulled up, and we can see that consumer discretionary has a number of individualized and underlying sub-industry groupings. So I'm going to take us over to apparel retailers. And from my work, this is the sector within retail where you really can get some supercharged outperformance. I see Land's End, which you reviewed. But this is an area for my MEM Edge weekly report. I do have 2 stocks up here. So there is currently on my suggested holdings list. So this SCTR, that's your stock charts technical rating. When you go into any of these sub industry groupings, you can go ahead and sort it so that up in the forefront, you will very quickly see your better movers. So we can start by taking a look at Boot Barn. This is one of the stocks that has been on my suggested holdings list. You can see it entered into a very nice uptrend. So I'm going to share with you when stocks begin to get moving, some of the characteristics that can be really quite powerful as far as signaling that. First up, it is going to be high volume. This particular high volume event was on very strong earnings. The company does Western apparel. It's not just boots. They do other apparel as well. Super popular. They've done a great job as far as marrying their work with these well-known influencers. And it's all about getting back out again, whether it's to country Western concerts and venues. And so the stock is in a very nice confirmed uptrend. So when you see this type of up advance on heavy volume, oftentimes similar to most stocks, it will need a period of consolidation. This was a significant 20% move here. And so the stock did just that. It rested, if you will, for a little bit over a week, waiting for this simple 10-day moving average to essentially catch up to the price. So in essence, I'm sharing a lot here, but it will make sense as we move forward, because this consolidation period formed what's called a high tight flag formation, which is bullish. About 80% of the time, you will get a nice breakout to the upside, and that is occurring today on nice volume. So this is a little bit of an aftermath, but certainly showing you what to be on the lookout for with these stocks that are on the move. So from here, I'm going to take a look. Most of my stocks, or probably all of them that I'm sharing with you today, are in this apparel retailer space. Again, I mentioned to you that this is an area that advances, that you can get some really big winners. So let's take a look at Tilly's, TLYS. And I am sharing this one. This is a whole different dynamic in the sense that it experienced what's called a downtrend reversal. And one of the reasons that Tilly's advanced prior to other retailers is all about back to school. Students in September began going back to class and they want to look good. Tilly's is a teenage, that's who they cater to, brick and mortar, as well as online retailer. So when you are looking for winners from my work, I want to see stocks that have that ability to outpace the broader market. A lot of that will be growth prospects. They have omni channels in place, and they still are in place, and they can take advantage of this reemergence of teens updating their wardrobes. So what I looked for here is for a stock, this downtrending. You can see it's met with upside resistance. Once it breaks back above this red 50-day simple moving average, does so on volume. Simultaneously, you get this RSI that turns positive, and then your MACD turned positive at the same time. So that is confirming your nice downtrend reversal. Very similarly to Boot Barn, it had a period of consolidation. And then, of course, today's news has people re-excited about the stock. I would argue there is still further upside for that name. Let's go back to this grouping, see how much time we have here, because I certainly wanted to share some other teen retailers that I would say were first out of the gate in these retailers. This is Buckle, BKE, a Midwest clothing retailer. Blue
I was
jeans.
looking at that one too before the program.
Yes, so I'm sure I can see why. We had this nice base breakout here on volume. You see this uptick here in the volume. And then over the last 2 days, continued volume. The stock is in a confirmed uptrend. I'm going to go ahead and put a 5-day simple moving average. And this, when these stocks really get going, that is going to be your new key area of support. Pullbacks to that 5-day then become your entry point. And let's go back and see what else other names I had highlighted here as being in an uptrend. So Canada Goose, GOOS. Now this is a company where I am going to pull up the weekly to show you really when this name gets going. This is actually 2017 into 2019. And it was a period when individuals, it was just a hot brand. Even though it was 90 degrees, people were wearing their down-filled clothing and jackets. So what has happened subsequent to that, they regrouped and they've expanded their product line. So let's just take a quick look at the stock. And actually what you can see is it had this big gap up here, redrawing, on volume. and it was in response to earnings. So the stock is back. Let's just say that. It had a base breakout, super big volume on the news, and it propelled the stock into this confirmed uptrend. We are still seeing nice high volume as the stock advances, but most definitely a very trendy global Canadian-based company, but globally as far as a must-have in your wardrobe if you are trying to impress your classmates and otherwise. So I'm wondering, I think I do have time to take a look at another stock in this apparel retailer space. And that is also another, this is another retailer that is teenage based, Zumiez. And
Lots of flags.
yes, that's exactly. So what happened is these guys were first out of the gate, and then these periods of consolidation pull back to this 10-day simple moving average, a little bit extended here. I'm sure I can carry on, but I'm sure as well that you are getting the case here. This is Shoe Carnival SCVL. This is actually a cup with handle base
Indeed.
breakout. I don't know if I have a second here to mark that up because it does bear noting. And so we've been able to not only share stocks with you, but also really dynamic formations. So a cup with handle base is when a stock hits a new high, pulls back, and does not it gets to about 2/3 below this prior high, forms a handle, and then breaks out. Sorry for my
Right.
drawing.
Hey, it
We're
worked.
just, but yeah. So, and then we can see the high volume characteristics on that cup with handle base breakout. So that is all we have time for at this point. We are going to take a brief break and we have lots more to cover. We'll be right back. And we are back, Erin. One of our more favorite segments here we are going to do is called Wisdom of the Week. And this is where we share our wisdom with you, always with an eye toward being tied into the theme for today. So, Erin, I'm going to let you share your wisdom first.
Well, one of the things that I was covering earlier was the seasonality tool and using seasonality. I think talking retail right now makes sense. It's one of those seasonal trends that we recognize all the time. But uncovering seasonality can really boost your confidence factor on your investments and your trades. So even if we're not talking retail and it's Christmas, you can still use that tool to uncover whether your stock tends to do well during that time period or not. And that does give you kind of that extra edge.
Very good. Well, my wisdom of the week is a little bit different. It talks about uncovering these big super winning stocks. And what I found over time is if you go back over, in fact, the last 7 decades, each decade, retail sales are in the super top performers. In the 90s, it was Gap was a top performer. So going back 2000 to 2010, the top 2 stocks for that period were Hanson, the beverage company, and
Hmm.
then Green Mountain Coffee Roasters,
Wow.
up an average of 77,200%
Holy moly.
over that 10-year period. And then actually that was 2000 to 2010. From 2010 to 2020, number 1 and 2, Netflix was up 4,000%, and Domino's Pizza also up 4,000%. So point again here is the relevance of really paying attention to those retailers. I know for me, I get attracted to technology and elsewhere, but we're here to say do not ignore the consumer related stocks. So that's our wisdom of the week. So next up, we are going to talk about what we call an action plan. This is where we share with you ways that we think that you can embrace retail and just other hints similar to that. So Erin?
So again, bringing us all the way back to the seasonality tool, I did show everybody how you can use seasonality, that tool. And what my action plan for you is go ahead and check out your holdings and just get an idea of seasonally how they react. And that can give you a little bit of a hint as to whether the wind is at your back or are you going into the wind and maybe having to fight that. So my action plan for you is to go out and use that seasonality tool for what you have as your holdings, and then maybe practice it by looking at different sectors and industry groups.
Very good. And my action plan is all about my approach to uncovering big winning stocks. And that is stocks that go on to outperform the markets have strong earnings. That's a proven fact. And so we are just now entering earnings season for retail stocks. They are the last to report. This is third quarter earnings. So quite simply, you can go to MarketWatch or other websites, and they will show you the earnings, how much they may have come in ahead of estimates. And from there, take a look at the chart. A lot of the names now are going to be retail related, and it can really be a very helpful way as far as getting you in front of these stocks. I shared with you a number of names that really had extensive moves after reporting strong earnings. So that is my action plan for the viewers. And so from here, we're just going to share a little bit of intel as far as what do we do outside of StockCharts.com that people might be interested in learning about.
Well, as we often say, who we are and where we're from, Erin Swenlin at decisionpoint.com. That's where you're going to find my market newsletter that gives you the update on the market in general. And then, of course, for traders, I also have the Decision Point Diamonds, where I uncover what I call diamonds in the rough. And they are stocks that, according to my analysis process, are poised to do really well moving forward. So if you want a lot of stocks put in front of you with already kind of set up to perform, Decision Point Diamonds is certainly for you. And of course, we run specials all the time. We're getting ready to gear up for a special here for the holidays as well.
Very good. Yes. And my work is housed on MEM Investment Research.com. I alluded to the newsletter that I produce. It is twice a week, but also alert reports. In fact, I will be putting out an alert report today, and it is adding a new retail stock. So you can go to my website. There is a special offer for that report, and you'll have immediate access to not only the current report, the alert report, but going back historically as well. So that is a lot of my work, certainly. And then, of course, we have other shows here on StockCharts.com as well, Erin and I. So
yes, indeed.
Check
Decision
that out.
Point show for me.
And Friday's weekly Edge show for me. So we are all about, again, what we call bridging the gap. We are here to help you really get a lot more comfortable with investing. And that's all for now. We will see everyone next time.
Happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.